Welcome to Cold Brew Finance's U.S. End-of-Week Technology Deep Dive, covering market moves in tech, communications, and healthcare indexes, stocks, and ETFs for the week ending Friday, March 28, 2025. I'm your host, Ira Roth. Let's dive in. Tech-related indexes closed sharply lower this week. The technology sector led declines, dropping 3.6% to 4,018. The sector has now closed lower for 6 consecutive weeks with a strong negative trend. The Nasdaq Composite fell 2.5% to 17,322. Market breadth was notably weak. In the Nasdaq Composite, decliners overwhelmed advancers by a 3-1 margin. The technology sector showed similar weakness with only 132 advances versus 561 declines for the week. Weekly returns reflect the broad weakness. The technology sector had the largest decline at -3.6%, followed by communication services at -3.2%. Healthcare showed relative stability with just a -1% return. Looking at 10-year performance, the technology sector leads with a 19.2% annual rate of return. The Nasdaq 100 follows at 16.1%. While healthcare trails with a 7.2% annual return. Among top tech performers, Jack Henry & Associates led with a 3.2% gain to 178.59. VeriSign followed, rising 2.6% to 250.92, achieving a new one-year high. Both stocks show very strong positive trends. Weekly returns show Jack Henry leading at 3.2%, while VeriSign gained 2.6%. Year-to-date, VeriSign shows impressive performance with a 21.2% return. Looking at long-term performance, Motorola Solutions leads with a 20.8% 10-year annual return. Tyler Technologies and Broadridge follow with 17.1% and 16.1% respectively. Leading the tech sector declines, Supermicro plunged 18.7% to 34.26, showing a strong negative trend. Broadcom dropped 11.7% to 169.12, while Oracle fell 7.4% amid increasing downward volatility. Trimble and Western Digital also declined significantly. The weekly performance metrics show Supermicro with a -18.7% weekly return and -4% average daily decline. Broadcom posted a -11.7% weekly return, while year-to-date returns remain negative at -27%. Long-term performance analysis reveals Supermicro with a 10-year annual return of 26%. Broadcom shows a 29.4% 10-year annual rate, while Oracle maintains a more modest 12.7% long-term annual return. Nasdaq-focused ETFs showed broad weakness. QQQ fell 2.4% to 468.94, while Vanguard Information Technology dropped 3.7%. VanEck Semiconductor ETF declined 5.6%, showing a very strong negative trend. The leveraged 3x bullish QQQ fell 7.7%. Weekly returns analysis shows QQQ down 2.4% with a -7.7% month-to-date decline. Vanguard Information Technology posted a -3.8% weekly return, while VanEck Semiconductor ETF saw a -5.6% weekly decline. 10-year performance metrics highlight VanEck Semiconductor ETF, leading with a 22.6% annual rate of return. Vanguard Information Technology follows at 17.8%, while QQQ shows a 16.1% annual rate over the decade.
Looking at stocks in tech industries, I'm Sally Short. Major tech stocks showed broad weakness. Alphabet led declines, dropping 6.1%. Meta Platforms and Microsoft both fell over 3%, marking their 6th and 3rd consecutive weekly declines, respectively. Year-to-date performance shows significant declines across the board. Alphabet has experienced the steepest decline at -18%, while Meta Platforms shows relative stability with just a minus 1.5% change. Month-to-date losses range from minus 4.6% to minus 13.7%. Long-term returns reveal varying performance patterns. Over 10 years, Amazon leads with a 26.4% annual rate of return, followed by Microsoft at 24.9%. Alphabet shows the lowest 10-year annual return at 19%. In semiconductor stocks, SemiLEDs stood out with a 7.1% gain, reaching a new one-year high. IPG Photonics rose 1.6%. Mobix Labs continues its downward trend, marking 6 consecutive weeks of declines. Year-to-date returns show semi-LEDs surging 75%, while Mobix Labs has declined nearly 50%. IPG Photonics shows a minus 10% return, despite recent positive momentum. 10-year performance metrics reveal challenging returns. MCore shows a minus 25% annual rate of return, while semi-LEDs records minus 9.9%. Cirrus Logic maintains positive territory with an 11.6% annual return. In cloud computing stocks, Box led gains with a 2.4% rise. Splunk hit a new one-year high while maintaining a strong positive trend. Scalar showed momentum with its second consecutive weekly gain. Year-to-date performance shows Scalar leading with a 14.8% gain. Dropbox has declined 11.6%, while Box and Splunk show modest gains around 3%. In cloud computing stocks, Splunk stands out with a 76% one-year return and 6 consecutive weekly gains, reaching new yearly highs. Cisco Systems posted strong gains of 22% over the past year, while Box and Dropbox showed more modest advances near 9%. AI and robotics stocks showed mixed performance. Mobileye Global gained 3.7% to 15.11, while ABB rose 2.4% to 37.34. Hyundai Motor increased 1.8%, showing upward momentum with 3 consecutive weekly gains. Looking at month-to-date returns, Holysys Automation Technologies leads with a 22% gain. However, Mobileye Global and Oceaneering International have both experienced declines, down 4.1% and 2.2% respectively for the month. Over the longer term, ABB shows impressive 3-year gains of 73% with a 20% annual rate of return. Holysys has advanced 51% in the past year, while Mobileye has declined 53% during the same period. In thematic ETFs, Automation ETF led gainers, rising 2.3% to 26.57. However, Nasdaq AI and Robotics ETF showed weakness, falling 3.3% and marking its 6th consecutive weekly decline. Pacer U.S. Cash Cows Growth ETF dropped 2.5%. Year-to-date performance shows challenges across AI robotics ETFs. Nasdaq AI and Robotics ETF has declined 8.5%, while AI and Robotics ETF is down 7%. Automation ETF has shown more resilience with only a 1.4% decline. 3-year returns reveal mixed results. Automation ETF leads with a 16.5% gain, while AI and Robotics ETF has declined nearly 30%. Pacer U.S. Cash Cows Growth ETF shows modest gains of 9% over the same period. Electric vehicle stocks showed strength this week. Faraday Future led with an 8.2% gain, while Rivian rose 6.9%. Tesla advanced 5.9% to 263.55, and BYD posted its 3rd consecutive weekly gain, up 2.8%. Leading electric vehicle stocks saw mixed performance. Faraday Future Intelligent Electric led with an 8.2% gain to 1.31, showing sideways movement for 52 days. Rivian Automotive rose 6.9% to 12.41, marking its second consecutive weekly gain with a strong positive trend. Long-term performance varies significantly among EV makers. Tesla shows a 10-year annual rate of return of 35.8%. BYD demonstrates solid growth with a 27% 10-year annual rate of return, while maintaining a very strong positive trend currently. In quantum computing stocks, quantum computing led with a 14.3% gain to 8.45, showing strong positive momentum. IonQ added 2.6% to 22.85, while Keysight Technologies and TE Connectivity both declined 2.7%. Weekly returns highlight quantum computing's strength, gaining 14.3% with a 3.1% average daily return. IonQ posted modest gains, while Keysight and TE Connectivity each declined about 2.7%. Long-term returns show quantum computing with remarkable growth, achieving a 100 to 21% 10-year annual rate of return. IonQ posted a 129% one-year return, while Honeywell International and Keysight showed more modest gains. Solar stocks showed dramatic moves, led by VivoPower International surging 203.8% to 3.92 with very strong upward volatility. Complete Solaria gained 3.3% to 1.54, while Spruce Power added 2.4% to 2.47. Weekly performance was dominated by VivoPower International's remarkable 204% gain, with a 39.7% average daily return. Other solar stocks posted modest gains, with Complete Solaria up 3.3% and Spruce Power rising 2.4%. One-year returns highlight VivoPower's 184% gain and Complete Solaria's 156% increase. Enphase Energy shows strong long-term growth with a 167% 10-year annual rate of return despite recent weakness. In tech thematic ETFs, iShares U.S. Medical Devices ETF showed the smallest decline at 0.31%, closing at 59.42. Other cybersecurity funds faced steeper drops, with ETFMG Prime Cybersecurity ETF declining the most at 2.7% to 72.40. Mixed trends dominate across these specialized funds. Looking at short-term performance, ETFMG Prime Cybersecurity ETF shows the largest weekly decline at -2.77%. Month-to-date, iShares U.S. Medical Devices ETF has experienced the steepest drop at -6.82%. Year-to-date, First Trust Index X Innovative Transaction and Process ETF leads with a 4.78% gain. Examining longer-term returns, iShares U.S. Medical Devices ETF stands out with a 10-year annual rate of return of 115.2%. ETFMG Prime Cybersecurity ETF shows a solid 100.2% 10-year annual rate of return. The newer funds show positive one-year returns, ranging from 10.4% to 13.2%.
And with that, we wrap up another end-of-week technology deep dive. I'm Ira Roth, along with my AI co-host Sally Short. Thanks for watching. Please like, subscribe, comment, share. Cold Brew Finance is an experimental project with market reports written, narrated, and delivered totally by AI, with market data kindly provided by financialmodelingprep.com. Always seek professional financial advice before making any investment decisions. Check into the channel daily for coverage of stocks, crypto, currency, and commodities. Thanks for watching.